Welcome back to another episode of the Investing Iguana, the show where we make investing fun and easy for everyone. I'm your host, Iggy, and today we're going to talk about 4 promising U.S. growth stocks that are in the portfolio of Temasek Holdings, one of the world's largest and most successful investment firms. Temasek Holdings is a Singapore-based company that manages a whopping $500 billion of assets across various sectors and geographies. They recently released their annual review for the fiscal year 2023, and despite facing some challenges due to the pandemic, they still managed to achieve a respectable return of 8.5% for the year. But what's more interesting is that Temasek has a long-term track record of delivering double-digit returns on a compounded basis over 10 to 15 years. That means they know how to pick winners and hold them for the long haul, which is exactly what we want to do as investors. So, in this video, we're going to take a peek into Temasek's portfolio and see what U.S. growth stocks they are betting on. These are companies that have strong competitive advantages, huge market opportunities, and impressive financial performance. And who knows, maybe you'll find some inspiration for your own portfolio as well. But before we dive in, please do me a favor and smash that like button, subscribe to my channel, and turn on the notification bell so you don't miss any of my future videos. And if you have any questions or comments, feel free to drop them below and I'll try to answer them as soon as possible. Alright, let's get started. The first U.S. growth stock that Temasek owns is Thermo Fisher Scientific, which is a leader in life sciences research and innovation. Thermo Fisher provides scientific instruments, reagents, consumables, and services to customers in various fields such as healthcare, biotechnology, pharmaceuticals, academia, and government. Thermo Fisher has been growing steadily over the years, with revenue increasing by 14.5% to $44.9 billion in 2022. However, due to higher expenses, net profit dipped by 10% to $7 billion. But don't worry, Thermo Fisher still generated a positive free cash flow of $6.9 billion for the year, which means they have plenty of cash to invest in growth opportunities and reward shareholders. In fact, Thermo Fisher has been increasing its quarterly dividends consistently since 2018. Back then, they paid out 17 cents per share every quarter, but now they pay out 35 cents per share. That's more than double in just 5 years. Thermo Fisher also has a huge market opportunity ahead of it. According to its own estimates, its total addressable market is $240 billion and growing at 4% to 6% per year over the long term. That means there's plenty of room for Thermo Fisher to expand its market share and revenue in the future. Thermo Fisher is also constantly innovating and acquiring new technologies and capabilities to stay ahead of the competition. For example, in 2022 alone, Thermo Fisher acquired 3 companies: PPD, a contract research organization, Mesa Biotech, a point-of-care molecular diagnostic company, and Henogen, a viral vector manufacturing company. These acquisitions will help Thermo Fisher strengthen its presence in high-growth areas such as clinical trials, COVID-19 testing, and gene therapy. So, if you're looking for a solid growth stock that has a dominant position in the life sciences industry, Thermo Fisher might be the one for you. The second U.S. growth stock that Temasek owns is Roblox Corporation, which is an online gaming platform and a game creation system that allows millions of users to enjoy immersive digital experiences. Roblox is not just a game company. It's a metaverse company. A metaverse is a virtual world where people can interact with each other and create their own content and experiences. Roblox is one of the pioneers of the metaverse concept, and it has built a loyal and engaged community of users and creators who spend billions of hours on its platform every month. Roblox makes money by selling its premium currency called Robux, which users can use to buy virtual items or access premium features within the Roblox world. Roblox also shares some of its revenue with its creators who make games or content on its platform. Roblox has been growing rapidly over the years, with revenue increasing by 16% to $2.2 billion in 2022. However, as you can see from this chart, Roblox's revenue growth has slowed down significantly from the previous years, mainly due to the easing of lockdown measures and the return of in-person activities. Roblox also has a negative free cash flow of $58.4 million for the year, which means it spends more money than it makes. This is because Roblox invests heavily in its infrastructure, technology, and content to support its growing user base and to improve its platform. But despite these challenges, Roblox still has a huge market opportunity ahead of it. According to its own estimates, its total addressable market is $180 billion and growing at 9% per year over the long term. That means there's a lot of potential for Roblox to increase its user base, engagement, and monetization in the future. Roblox is also constantly innovating and expanding its platform to offer new and diverse experiences to its users and creators. For example, in 2022 alone, Roblox launched several new features and initiatives such as voice chat, which allows users to communicate with each other using their real voices. Metaverse events, which are live and interactive events that showcase popular brands, celebrities, and influencers. Roblox China, which is a joint venture with Tencent to bring Roblox to the Chinese market. Roblox Education, which is a program that provides free resources and curriculum to educators and students who want to learn coding, game design, and digital citizenship. So, if you're looking for a growth stock that has a unique and innovative platform that is shaping the future of entertainment and social interaction, Roblox might be the one for you. The third U.S. growth stock that Temasek owns is Shopify Incorporated, which is a leading e-commerce platform that enables merchants of all sizes to start, run, and grow their online businesses. Shopify provides a suite of tools and services that help merchants create beautiful and functional online stores, manage their inventory and orders, process payments, ship products, market their brands, and more. Shopify has been growing rapidly over the years, with revenue increasing by 46% to $7.3 billion in 2022. Shopify also turned profitable in 2022, with net income of $1.3 billion and free cash flow of $1.4 billion for the year. Shopify also has a huge market opportunity ahead of it. According to its own estimates, its total addressable market is $153 billion and growing at 16% per year over the long term. That means there's a lot of potential for Shopify to increase its merchant base, revenue per merchant, and market share in the future. Shopify is also constantly innovating and expanding its platform to offer new and better solutions to its merchants and their customers. For example, in 2022 alone, Shopify launched several new features and initiatives such as Shopify Balance, which is a business account that provides merchants with financial tools such as debit cards, rewards, cashback, discounts, and more. Shopify Markets, which is a global marketplace that connects merchants with customers across different regions and currencies. Shopify Fulfillment Network, which is a network of warehouses and logistics partners that help merchants deliver products faster and cheaper. Shop Pay Installments, which is a buy now pay later option that allows customers to split their payments into 4 interest-free installments. So, if you're looking for a growth stock that has a dominant position in the e-commerce industry and that empowers millions of entrepreneurs around the world, Shopify might be the one for you. The fourth and final U.S. growth stock that Temasek owns is MasterCard. One of the U.S. growth stocks that Temasek is investing in is MasterCard, the global leader in digital payments. MasterCard is a company that needs no introduction, as it is one of the most widely used and trusted brands in the world. MasterCard operates a network that connects millions of merchants, consumers, banks, and governments in over 200 countries and territories. MasterCard makes money by charging fees for each transaction that goes through its network, as well as providing value-added services such as data analytics, fraud prevention, and security solutions. MasterCard has a huge competitive advantage in its network effect, which means that the more users and merchants join its network, the more valuable and attractive it becomes for others to join as well. MasterCard also benefits from the secular trend of digitalization, which is accelerating due to the pandemic and the shift to e-commerce, online shopping, and contactless payments. MasterCard has been growing its revenue and earnings at a high rate for many years, and it has plenty of room to grow further as it expands into new markets, segments, and technologies. MasterCard is a stock that you can buy and hold for the long term, as it is a leader in a massive and growing industry that is essential for the global economy. Temasek owns about 0.3% of MasterCard's shares, worth about $1.2 billion. MasterCard just reported a strong performance for 2022 and the first quarter of 2023, showing that it is recovering well from the pandemic. The company benefited from border reopenings and the resumption of economic activity across the world in 2022. Revenue rose 18% year-on-year to $22.2 billion last year, with net profit rising by 24% year-on-year to $10.3 billion. For 1Q 2023, revenue continued to increase, rising by 11% year-on-year to $5.7 billion. However, net profit slid by 10% year-on-year to $2.4 billion because of higher expenses. Despite the dip in profits, MasterCard's free cash flow came in at $1.57 billion, 5.3% higher than the $1.49 billion generated in the prior year. The gross dollar volume of transactions also saw a 15% year-on-year growth to $2.1 trillion for the quarter. The payments giant also paid out a quarterly dividend of 57 cents, up from 49 cents a year ago. MasterCard is a stock that you can buy and hold for the long term, as it is a leader in a massive and growing industry that is essential for the global economy. MasterCard continues to collaborate with partners to grow its business. In May, the company announced the expansion of its payment partnership with UniCredit S.p.A., BIT, UCG, a pan-European commercial bank. The agreement now extends to 13 banks in 12 markets in Europe and covers 20 million cards, helping to broaden MasterCard's reach and enhancing the payment experience for its customers. This is just one example of how MasterCard is constantly innovating and creating value for its stakeholders. And that's it for today's video. I hope you enjoyed learning about these 4 U.S. growth stocks that are in Temasek's portfolio. These are companies that have proven track records, strong competitive advantages, huge market opportunities, and impressive financial performance. But remember, this video is not financial advice. It's just for educational and entertainment purposes only. You should always do your own research and due diligence before investing in any stock. So, what do you think of these 4 stocks? Do you own any of them? Are you planning to buy any of them? Let me know in the comments below. And if you liked this video, please give it a thumbs up, share it with your friends, and subscribe to my channel for more videos like this. And don't forget to hit the notification bell so you don't miss any of my future videos. Thank you so much for watching, and I'll see you in the next episode of the Investing Iguana. Until then, happy investing.